You must work 6 days a week now. That's an order. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Wednesday, the 5th of September. In a leaked letter, the European Commission, European Central Bank, and International Monetary Fund are calling for Athens to implement a 6-day work week as part of a bailout agreement. Sounds great on paper, but how would you like to be the people of Greece? No country, including Greece, enjoys being dictated to by an outside power. Make no mistake about it, Greece is going to have to drop out of the Eurozone. All eyes will be on the ECB chairman Mario Draghi tomorrow as he announces the details of his bond buying program. If it is deemed not enough, the markets will tank. More bad news for the U.S. The World Economic Forum, WEF, released on Wednesday that the U.S. had slipped 2 spots on global competitiveness. This marks the 4th year in a row that the U.S. has moved down. Last year, the U.S. was ranked 5th in the world. Now it's ranked 7th in terms of global competitiveness. Not good news. Okay, now let's go to the charts and our trade triangles and see what's really happening in the marketplace. We'll start off with going to our portfolio like we normally do, and we'll start off with the S&P 500. You can see we're at minus 60, indicating a trading range. And if we bring up the charts, you can see that yesterday we had a weekly trade triangle indicating weakness. Now remember, we did say the 397 was a key level. We got down to 397.01, just stopped short of that. That to us now is a very key level of support. If we go below that level, then I think we'll see more downside pressure. But again, it looks as though this market has been steadily moving higher. Remember, our long-term monthly trade triangle is now positive from 1,415, while our intermediate term trend is negative. If you're an intermediate term trader, you should be out of this market right now. If you're a long-term trader, you should remain long. So let's go to our next market. That's going to be looking at the Dow. The Dow is a completely different picture. The Dow is a minus 90, indicating a strong downtrend. Now the downtrend really picked up steam on the 30th of August at 13,027. The market's 13,065, but nonetheless, all of our trade triangles are negative. Not a good sign, particularly for the Dow. And maybe the strategy would be long the S&P, or long the Nasdaq, and short the Dow. So equal amounts is sort of a hedge program. Next market we're looking at is the Nasdaq. The Nasdaq is looking pretty nice, as a matter of fact. We're plus 100. Obviously, Apple has been a huge driver of this particular index. We are getting to the point where we're getting a little bit overbought, so some caution is warranted there. But the trend is clearly up with the monthly, weekly, and daily very, very positive. Moving along to our crude oil. Crude oil is very, very key level. It found support. I'll draw that in. And the key level we're looking at is right here, this 94 level. It got down there very close today, popped back up, still low for the day, and you've got this 98 level right here as resistance. Now this resistance is really key because that represents a 61.8% fib retracement from the highs that we're seeing back here to the lows, the recent lows that we're seeing. So that's a very important Fibonacci retracement, and I expect that's going to hold the market at least for the near term. But you've got mixed bag there. You've got a minus in the column of the monthly, a plus in the weekly, and a minus in the daily. So you've got a 65, and that's basically a trading range. So I think that's the key thing to remember there. So let's see how that plays out. But generally speaking, we've gone from overbought to not quite oversold, but certainly getting there. So pay attention to that one very closely. So let's clear the screen and go to our next market. Next market we're going to be looking at is going to be the Eurodollar. This has been all over the board, but certainly the lines have been drawn very clearly in this. In my opinion, you've got this area here, the 126 and change level right here, and you've got the 125. So 126 on the upside and change, and 125 on the downside. We need to break out of this level. I think possibly tomorrow we could do this with Mario Draghi coming in and making those announcements. If we see a bond buying program that isn't quite what the market's looking for, then I think we'll see a resumption of this downtrend, which matches the monthly. If we see something that's not quite there, then I think we may pop through the highs and see more upside objectives. But we do have another level of resistance, which is right here. And that's about the 127.50 area. So they're the two levels to watch at, 126 and 127.50. So we're currently trading at 126.02. So we're back up towards that resistance level. We had a very strong down day yesterday, so we're also in a choppy range, and that's indicated by the plus 70 right here. That's a trading range. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be the gold market. Now this is clearly in a bull market, and I want to say this so we're all on the same page. We have a plus 100. If we scope this out to a couple of years and we take all of the trade triangles off and we just simply put a very clean line chart on here and take off the Fibonaccians and the parabolics, you'll see what I'm talking about. And that is we can draw a line from here, down to here, down to here, the 3 points we talked about. Touching, it's touched, it's broken above there. We may see a little pullback. But that's the pullback to buy. This market has the potential of going much, much higher. And the other thing, I want to just draw this in. If we draw this in, here's a 61% retracement, which is a perfect retracement for a bull market. And that's a nice move up. We've come back down, and now I think we're going to have another move up, which I think will be possibly the fifth leg of the move. And that should exceed this previous high and probably take us over the $2,000 range. So I'm thinking our target zone right now, and remember, everything is fluid and you have to be willing to change if market conditions do change. But our target zone right now for this market is going to be plus $2,000 an ounce. That'll probably make a lot of bulls very happy, but the clear breakout here and the move we're going to see, I think is going to be very strong. And I think we've probably got another 7 to 8 months on the upside. So let's see how that plays out. But nonetheless, it's a very, very positive chart pattern, especially with a 61.8% retracement. So let's clear the screen and go to our next market. So clear that off right there. And clear that and go to our next market. Now we're looking at copper. Now copper is acting very, very well. I'm going to put the chart in and we'll get closer on this one. But you can see it's had a very good day today. Very overbought, which is a concern. Now when we put our Dungeon trade channels in here and also a parabolic, you'll see, yes, we sort of moved over the parabolic yesterday. Big move today. We're up towards the top of the Dungeon trade channel. Every time we've gotten up here, we sort of pull back. Here's a good example back here. And also here, and every time we moved out of the Dungeon trade channel, like here, and here we've sort of moved back in. So I think for the moment it looks very positive in an intermediate term basis, and if I put our monthly trade triangles in, you see they're basically negative longer term, intermediate term positive, but nonetheless it is in the confines of a longer term bear market. So not to get too excited about this market, because simply the 3.55 level is a very important wall for this market to climb over. I don't think it's going to do it this time. If it does, however, then I think we'd be very bullish on this market. And maybe because of inflation, what's happening in the other metals, we're seeing some sympathy buying coming into copper, but we'll see how things play out on that one. So let's go to our next market. And that's going to be silver. Silver, again, much like gold, plus 100, very strong upward trend. It is very overbought. We sort of consolidated here the last couple of days just to catch its breath, so to speak. But I think any kind of pullback in this market to the 31.50 level is going to be met with good support. This is a bull trend. So let me just emphasize that so we're really clear and there's no gray areas. This is a bull market, and it should be traded as such. We've got a very strong monthly. We have a strong plus 100. Everything indicates this market's going to go higher. So let's play it by their pullbacks. Should be met with support, and they're going to present buying opportunities. So let's clear the screen and go to our next market. And the next market we're going to be looking at is the Reuters Jefferies CRB Index. Again, this market has given us a signal. Inflation is on the way, and we moved over the level right here. This is about, let's just get this. We had this occurred on the 21st of August. So since the 21st of August, we've basically been going sideways in this market as it consolidates its recent gains. The big level of resistance here that I'm going to be watching is the 320 level right here. And this market should have very good support, I think, around the 305 level, which is right here. So 305 to 320, I think they're going to be two big levels to watch. But again, I think if we go over the recent highs, which was yesterday, I think we could see this market move higher for the week. It certainly is acting. It's a little bit lower for the week right now, but it's only Wednesday, and we have Thursday and Friday coming out. And of course, Mario Draghi's comments tomorrow could make a big difference to all the players in all the markets. So we want to be obviously watching that very carefully. And that's going to happen probably before we open. But we'll see how that plays out. We've covered a lot. We've covered our normal markets, and of course they're important. But I think we should look at some other things. We could look obviously at our what we call our trade triangles. This is one great tool that you have as a trader, and that is you can search different markets: equity, foreign exchange, futures, indexes, mutual funds, ETFs, whatever, any kind of markets, and you could put in what you're looking for. If it's an ETF you're looking for, volume greater than, let's say, than 2 million, we want liquid ETFs. And let's see if we have any monthly trade triangles in our search, and we'll search since today. So let's just click scan. Very easy today. No triangles found in the ETFs. So let's go to our equity markets and let's scan those. And here we are. We've got obviously this one we just ignore because it's so cheap. It's short, but Eldorado Gold. You've got $13.54. It's given a monthly and if you look at, just hover over here, you'll see what these markets do. And there's the monthly. Oh, hang on. It's just not showing up here. But they're here as you mouse over. I may have used it. There's a red monthly there. And you can just go to, if you like something, you like the way it looks. Goldman Sachs Group gave a buy signal today. These are all today's signals. There's a green monthly 107.34, currently trading at 109.60, so that's worked out very well if you go to the chart on that. You'll see Goldman Sachs and how it's trading. Look at this. Monthly, we kicked in right today. Looks really, really good. Very, very overbought, but it's made a really nice base. And if we look at this just from a purely technical viewpoint, you've got this really nice energy field, as we call it. You've broken out. We could just clear the screen, and let's just clear the screen and put our Fibonacci and see where that comes in. But this looks like it's really acting very well for the week. Obviously, sharply higher for the week. And if we put a Fibonacci in, and this is a well-known stock, this is not some obscure stock that sometimes gets promoted in some of the markets. We are up hold on, just let me get this right there. So we're actually 109, we're practically at the 50%. The next is 114, which is the target zone, 61.8% target zone. Where the market should find natural resistance. And if you look at this closely, you can see that back here is where you do have some real challenges right around these. Some work here the market did that I think will probably present some challenges. So right around this 114, 114.50 level, we'll maybe see some problems for Goldman Sachs. But right now we're very extended on the upside. Every time we've gotten here, it's sort of pulled back, but nonetheless, it would appear as if Goldman Sachs is in a bull market. So let's see how things play out. But I'm Adam Hewison for Market Club. Thanks for stopping by. I hope you found today's update informative and helpful to your own trading. But look tomorrow, because Mario Draghi is speaking. Everyone's waiting for the ECB president to come in and make some statement that's going to move this market one way or the other. So let's see what happens tomorrow. Have a great day trading.